Welcome to The Derivative by RCM Alternatives. Send it.
Okay, everyone, welcome back. Hope you're well. Finally starting to thaw out for those of us in the Midwest and the Northeast. And we're traveling to a warm climate today, talking with Bruce Sinclair in South Africa. He's way up there near the Botswana border. Bruce has traded large grain houses, the government there, now runs his own shop, Brent Trading. So we dive into all of it, what it's like trading U.S. markets from that far away, why ag commodities don't work that well for inflation hedges, everything to do with soybeans, and how he works in the spread and carry trade war. Send it. Everybody, we're here with Bruce Sinclair. Bruce, how are you?
I'm good. Good, Jeff. Thanks. Very well.
You're in South Africa. Whereabouts are you in South Africa?
Well, myself, I'm about 300 kilometers north of Johannesburg, but our office is 100 kilometers south of Johannesburg. So we're up in the northern part of South Africa. We're not in the lush area, Cape Town, or in the Garden Route down there. So
Yeah.
we're pretty much.
So you got to be close. How much further north does it go? That's got to be about to the border, right?
Yeah, well, further north, probably about another 300 kilometers, but to the west, probably 80. No, it's 80 kilometers to Gaborone, which is obviously the capital of Botswana. So we're about 30 kilometers from the actual border. That's where I'm sitting, and it's a little bit of a quiet place, easier to work from here. Kids are out of school, so I don't have to rush to school and those kind of things. So it's time to do what I actually want to do.
And do you ever have to use that compound bow on the wall back there?
It's actually, I meant to use it. I bought it, but now it's become a decoration because I didn't have anywhere else to put it. But to tell you the truth, I haven't been able to shoot anything with it, at least not accurately. So, but it takes a lot of time. So, but I'll get around to that.
I had an embarrassing story. I was down in Florida visiting an old high school friend. Her son was practicing with one of those, and I'm like, let me give it a try. I could barely get it back, and then I hit the trigger accidentally and punched myself in the face, gave myself a bloody lip. So I'm like, oh, it's tougher than it looks.
Yeah, it can be pretty treacherous. I've seen a couple of guys hurt themselves. Yeah, so I set the tension right down, so it's just easy to do it. And
that's the secret.
That's probably why I'm not getting anything target hit. Probably the arrows falling on the ground before the time. But yeah, at least it's a good way to spend time.
Love it. So are you born and raised South Africa? You've been there the whole time?
Yeah. I was born and raised in South Africa. My dad was a farmer. He's been most of his life breeding a stud Simmentaler breed, which is a cattle breed. So, and went on to varsity from school, went into agriculture, did a basic BS degree in agriculture, and went on to commodities and did honors in animal feeds components. So that's practically where my background or my experience comes to, these markets. Spent a good time in the Department of Agriculture doing a bit of advisory services and
for the government there.
Yeah, with the government when it was still functioning, and after that, they started trading commodities on the Johannesburg Stock Exchange, I've been involved in that since it started, and we were trading electronic, obviously long before Chicago was. So we do figure ourselves that we're ahead of the market, which we're probably not.
What does the agriculture in South Africa look like? You got mostly cattle. There's grains as well.
Yeah, the grains are the biggest. We'll have white maize, yellow maize, and wheats, and sunflower is also a big market for us. But white maize or white corn is probably our biggest market because it's not traded on any other exchange. So this gives us ample opportunities to look at divergences between white and yellow maize. That's our background. That's where we started, and probably that's our strength. Looking into specifically the corns or the white maize, as we call it locally, and looking into the carry of that because we had to grow into that market. We didn't know anybody in the financial markets when we started out. We had to take this agricultural markets and put them on the board and start working them as financial instruments. So I was
as a
trading.
country, you're saying?
Yeah, as a whole
Yeah.
farming community. So luckily, while I was working at the Department of Agriculture, I started trading futures on indexes and on the South African exchange. And when they started adding agricultural products, it was quite easy just to move over to that sector because there was a real vacuum. So then I started working for one of the grain merchants in the country, and we did a lot of sourcing, mostly on the supply side. And yeah, we delivered that to most of the processors or factories or silos or
And
elevators.
where is it staying in South Africa? Is it going throughout Africa? Or is it mainly an
Yeah,
export?
it's well, 80% is local usage, but we'll have export to all the northern countries of South Africa. Plus, we have a couple of inland countries. We've got places like Lesotho that Trump doesn't know about, and places like Swaziland, which is a country within our country, but
Yeah.
it's been there. So even if we supply them, it's reckoned as an export. Yeah, it's mostly let's rather call it Southern Africa supply. We don't really supply really, internationally. We don't supply to Russia or to
Yeah.
the European Union or to obviously or not Argentina and Brazil. So we're mostly consumers of our products.
And then what did those new futures markets look like? Like in terms of comparing it with the board of trade at the time? Like a tenth, a hundredth of the size
Yeah. Jeepers.
of the volume, I mean?
It's probably less than 100. I'll have to go
Yeah.
do the calculation on that, but we trade like, on a good day, we'll trade 5,000 contracts, which would probably be, let's say 5,000 contracts, which is 50,000 tons.
Yeah. I think I
So
just pulled it up actually.
that,
Yesterday CME corn was 500,000 contract.
yeah. So
So that's a trick in and of itself to
that'll be
figure
on a
that.
good day. That'll be on a very good day. Yeah.
Yeah.
Luckily, the market players are also less, so we have less competition than obviously on Chicago Board of Trade. But we did get into the practice of finding out how the spread functionality actually works between contracts, specifically the carry and the backwardation. So I've been in that market since around about 2000. Actually, when I started working for one of the grain merchants. So and eventually went on to start this company in 2002. So we've been really just been doing this from 2002, and we were just focusing on spreads, not taking a market outright view. Um, I think trading the futures is obviously very volatile, and the spreads just takes the edge out of the market. For you, it just brings it back to a little bit more of a homely sort of position where you can actually manage a position. So we went to spreads quite early in let's say, in our history of the company, and found that
Yeah.
that's where we were good at, and that's where we've been we've been running since then. And well, the futures market, it can be hectic, and you'll really have to do well if you're going to survive in the futures market. So, but we've been there since 2002, and I think that's just because we're not doing futures or
Yeah.
price speculation. We're just
Somebody
looking
needed to
at
tell all the people trading silver futures last week. Down 33% in a day.
yeah,
Like,
yeah.
welcome
Well,
to the
it's
future.
like obviously it's like Bitcoin. Guys trade Bitcoin, but I wonder if anybody's ever seen one. This is kind of difficult for me to grasp coming from you're in the agricultural sector, and obviously this is what I like is actually to go out into the lands and see how the crop is doing, when's the time for planting, when the product is getting to a critical stage where it's sensitive to weather and sort of thing. It gives you a real feel of the product you're trading. I mean, I still don't really understand Bitcoin. What's the difference between Bitcoin and black tulips, for instance?
Yeah. Nothing.
Don't know what's the difference. Everybody's got a hype on Bitcoins because it could be a something, it could not be. So
I think Bitcoin's just if you're delayed at the airport and you don't have any poker chips and you like tear up a piece of paper and divvy it up amongst your friends and play poker for the pieces of paper. It's just for trading firms and traders to trade something, right? It's just little
Okay.
pieces of paper they can trade.
Well, I know lots of
Um,
guys that have made good money on it, but yeah, they'll only tell you
and
when they've made money. They won't tell you when they've lost it. So
exactly.
obviously, yeah.
And are you actually going out in the fields and like you said, like as that time comes and it's susceptible
Yeah,
to the
yeah.
weather, are you actually going on crop tours and saying like, okay,
Yeah,
here's what I see?
we do, Jeff. Yes, but obviously locally. So I don't do the Chicago tour or the US tour because obviously it's just too big. Even the guys that do the analysis, they don't get around everything. So I do. Looking at their reports, and obviously I am a little bit wary that you can't get a good whole picture because any farmer in any state or any land that if you speak to, you'll tell you the crop is under stress and they're
Mhm.
probably not going to get a high yield. If a farmer is telling you he's getting a massive yield and this is looking good, he might be on something. It's just not
They're pessimists usually about the crop, but they're optimists about the price of it.
absolutely. Yeah. Well, you can't say they're pessimists because obviously they're planting when it doesn't rain.
Yeah.
And they're obviously praying for the rain, which is it's difficult for a producer to short a market. It's really rare for a producer who's thinking about speculating for him to sell the market. It's very difficult for them to get square just to sell what they have because they're always going to hold back something. And that's just the nature of obviously of how they work with this product. When they producing it and they obviously want to get the best for it. But and it's just like psychology behind that is just to hold on to the product
Yeah,
as long
we'll
as you
see a lot
can.
of in our ag unit, we'll see a lot of groups hedge, but then they'll buy it back on the board and that like they can't, as you're saying, they can't stay even. They want to re-own it. Like, well,
Yeah, yeah,
you were successful in your hedge, and then the price came down, and they're like, well, now I should buy again.
yeah.
Like,
No, well, yeah. I would love to see how many producers are actually speculators. And as far as positions concerned, that would be like, a really eye-opening. But I think the producers are a really large percentage of the speculators in the market.
for sure, we call it hedgulating here. Instead of speculating, they're hedgulating. They like, oh,
Okay,
I'm just gonna
okay,
own
okay.
some more
So
of
you
that.
so you know that crowd.
It's a big crowd for sure. So take me back. So you got into the spreads, but you weren't spreading your white maize versus U.S. corn futures. You were doing month
Yeah,
spread, like calendar
yeah,
spreads
we
in
were.
the U.S.
Yeah, I think
or both. Yeah.
well, it was sort of progressive. But to start, we were like just doing white maize calendar spreads, buying
Mm.
in the carry spread and, just holding it when there was shown some carry. And we found that there you can actually get paid for patience because you're buying a carry spread, you're long the nearby month, you've hedged it. And if anything happens down the line in that period, um, obviously the front month will rise, and then you can actually sell it for a profit, and that's with a sort of a low risk approach.
And talk through that, right? People hear the carry trade and think they're selling yen and buying dollar, whatever. Like they think of it in currency terms. So talk through what you mean exactly by the carry trade in the grains there.
Okay, all right, sure. When I'm saying buying the carry trade, I mean you're buying the product. If you're buying physical stock or the futures, well, obviously it doesn't make that much difference, but you're buying the current or the nearby month and you're selling that forward 3 or 4 months later, selling it as a hedged. So you've actually hedged, but you're holding the nearby contract. So what you're hoping for is obviously for market to go from a sort of carry, which is presenting it, it's paying you a carry. So it's paying you to carry this product for 6 months.
Yeah.
So obviously, we're hoping for some volatility and that there will be a short supply on the near side, be a bit of a short-term rise on the nearby market. So that's typically a safe trade in our books, and it's worked most of the time, except 2025 has been very challenging as far as that's concerned with the tariff wars. But obviously, it will change. Even one of those strategies, if it hasn't worked for 1 or 2 years, it doesn't mean it's not going to work next year. The chances that that specific seasonal spread will work the next season is probably just going to increase.
And is that based mainly on rates or storage capacity, or what's that You're basically saying the
Oh
back
yeah,
end's not going to move
the
as much.
cost to carry it. Well,
Yeah.
let's say if you were to buy that product and put it into silo and you actually own it, you would have to be paying for the product. So you will have an interest cost that you're carrying and the storage costs because the elevator will charge you storage. So you always see, look into the forward market when there is carry, that the prices will be increasing going into the further months to actually pay you for storage. So if I have the product now, I could sell it for X, but I could sell it later for X plus something. And that plus something is obviously something to pay me for the carry charges. And it normally doesn't pay you everything it costs you, but it does give you this great advantage that you're just holding the product. Futures market, you've got relatively low risk and you're just holding the product and you've really just
It's
got
almost like an
large upside. Yeah, I don't want to
like
say
a little
that
bit of an
word.
option trade there.
Yeah, no, let's not say that word. But yeah, it gives you, you've got a sort of a limited loss created on a calendar spread. And that's what they do. They give you sort of a back door. And if a calendar spread sometimes goes against you, let's say you've bought it at, typically Chicago works on a negative number. So let's say we've bought the spread at a -20 and it moves to -25. It's actually getting to a better position for new entries. So they always say don't double up, but in the case of spreads and carries, you're actually getting to a lower risk the more the market goes against you. And at some point, the big financial institutions will get involved in there because they might be able to buy a product and actually sell it as a profit in the future. So
like a instant arb kind of thing, right?
Yeah. But that's only if the world is stable and there's no major upsets, because it still is a future market, and even though we do these calculations, things can get really hectic.
Yeah, and talk through that for a second, because spreads are notorious in the U.S., at least for our natural gas. It's a big one, right? Like Amaranth went bust because the seasonal trade worked forever until it blew out one year, huge, and took down some firms. So it seems like the spreads are always less volatile until they aren't. So how do you protect against that, or how do you view that?
Well, there's two sides to that story. The first one being that if it did blow up and it went against, that means it could have. Natural gas is difficult because we don't have this full carry sort of thing. But in the grains you do have. So if you're buying the carry, as long as you can actually hold that product and carry it forward, it will never blow down under carry. You always have something going, carry shooting up. So if you're going to short a carry, let's say if a market's way into backwardation, obviously what I'm saying is where the spot month is a lot higher than the further months. If you're shorting that thing and you're selling the spot month and hoping that this thing is going to go to carry, which it like always does, and the same would be true for the wheats. For the wheat situation, except when the Ukraine war came, the July deck on the wheats always moved from 0 to a minus, went to a carry. Except the year when Ukraine was invaded and it just went ballistic. But it went ballistic if you were short in the carry. So as far as carry is concerned, we always like to be a buyer of a carry. That's sort of our back door, Yeah. But
so the
then,
people mainly get in trouble selling.
Yeah, Jeff. Yeah, you could do big volumes, expecting that this thing is going to not go further, and then obviously it blow up. That's what obviously will hurt you. And we were short on the wheat spreads, expecting them to go to carry. And when the Ukraine invasion happened, and fortunately, we've got a bit of a strict protocol as far as our risks are concerned, that when we hit sort of a level, and our program is designed to take a 10% knock and nothing more. When that thing went ballistic and it did 6%, and it was actually looking like it's even a better trade, or it's you can actually get in the gain because this thing has got to go to carry. Unfortunately, our stops threw us out. So we just cleared everything. We got out there. We went that month in with a loss, but we weren't out. And so obviously, what I'm saying doesn't matter how much you think you know of the market. You need a big mama there to step in when you're over your limits.
Yeah. And you guys kind of have a risk first approach, right? Like speak a little bit more about that. So you have that stop position, but
Yeah,
what else are you
yeah, we
doing on
put
the
a
risk
stop
side?
loss. Yeah, we have to have a stop loss in, and we'll calculate the risk that the program can take, and we'll divide that up to between the commodities that we're actually trading. So let's say in the grain spread, we've got two programs. So one is the grain spread, and one is diversified. That includes grains, but it includes softs and meats and some energy products as well.
Mm.
But in the grains program, typically we have total risk of 10%. Okay, that we never want to override. So we'll break that risk down to 2% per commodity, and then we'll look at the strategies and make sure. Let's say if we've got two strategies running, we'll only have exposure of 1% per strategy. So that will be our entry. So yeah, a very defensive sort of approach to the risk. We're not just going to do this program, keep going until it doesn't work anymore. We've got this program that's working for us now, but we need the risk controls to obviously to develop it and to be able to get into the market at the right spot. So we like to think that's the way we protect ourselves and our clients. And yes, it's been successful in the past.
Is that based per month? So if you hit that 10% level on each trade?
Yeah, no, 10% on the portfolio,
Or
total portfolio. Yeah. And
in a
that will
month
be,
or at any
no,
point?
no, that's on a year performance base. So at any time that the program is down 10%, it should be closed out completely, the whole program.
Through the rest of the year? Or you'll start getting back into
Well,
other
no,
trades?
until we can go and sit down and figure out what the problem was. Can we correct that?
Yeah.
But I'm approaching this from an investor's side. I'm saying, if I give this money to Brent Trading to invest in this program, what am I looking at as loss as a client? And then I want to say to you, listen, if you're going to invest as loss, you've got to be able to take a 10% drawdown at any time during the year. And that's the risk I'd like you to look at. If you can,
Yeah.
you don't, I've got friends, I'm sure you've got friends like that, Jeff, too. Like, they come to the market and they say, well, Jeff, you know about the market. Yes, $5,000, can you invest it for me? And we'll say, how much risk can you take? So no, I don't want to take any risk, but I want to make a lot of money. So
Yeah.
that's everywhere. So the exact same principle applies. If you want to take a 10%, we're saying to you, we're taking a 10% risk. If you're prepared to take a 20% risk, you'll have to do that on a notional fund sort of way.
Yeah.
Which we can do. So,
And that I've always had an issue of where people say, oh, I have this 2% stop loss, but then they'll exit the trade and then they re-enter the trade the next day where it now has another 2% max loss. If that stops out, they enter it. So I'm like, well, you don't really have a max loss. You're just getting out and putting it back up. So you're saying, no, we're actually stepping aside for a bit and reassessing. Like you won't get into that same trade.
Well, no. We don't want the yearly performance to be a -10 at the end, or anything bigger than that. So we've been able to do that since inception. We've never been down 10% or more, or basically any time in that program on a monthly basis. So, that's our intention. That's why I say from my money, I want it managed like that. I don't want to just invest in a program, say these guys say they can make your assets grow without constraints. I want to be clear. That's what we're looking at.
And do you try to be, right, if you get investors coming to you like, oh, I want this commodity exposure, I'm worried about inflation, I'm worried about this and that, and you're saying, okay, we do commodities, but it's not necessarily giving you an inflation hedge. Like, how do you view that? People thinking they want to buy and hold commodities versus what you do and those different kinds of exposure?
Well, probably first I'm going to say that doesn't work to hold it for inflation.
All right, let's talk more about that. Why not?
Well, let's just talk quickly about that. If you take the Bloomberg index of commodities or the grain prices as a whole, and you take it over the long term and you adjust it for inflation, you're probably going to see it just flat. So it is true that you might be able to hedge yourself against inflation by just holding these commodities, but commodities have, they've got a downside and a top side, and between that, they're going to move. Typically, it would be, when it drops, when you've got an oversupply, and when you've got a good demand, it's going to go to the high side. And those, it's not that they're hard limits, they're sort of soft limits. The market's going to worm its way between that. So you might be getting in 1 year, expecting yourself to be covered for inflation and actually have a negative figure going forward. I'm not convinced that there's any figures to really say that it's worthwhile investing in and agricultural commodities specifically to offset inflation. The thing about commodities is we don't have an alpha for performance. We've got no can your program do better than the average price of corn or the index price? No, we don't have that. We've only got supply and demand. And when there's supply, prices will go to the bottom, obviously, and when there's demand, it will go to the roof. That bottom and roof are sort of soft tops because the moment the price goes too high, China's going to buy from Brazil. That's the way they're doing. And at the moment it goes too low, people are going to stop producing it. So
we have a saying in the U.S. that the cure for high prices is high prices. They'll figure something else out. They won't pay.
I think it's the other way around. The cure for lower prices is prices. I'm not so sure about the high side. Because, some farmers will definitely always plant. I mean, this is their way of life, and then they produce it, and they probably use their grain. But when it comes to business, let's say agricultural businesses, obviously they do this all the time. Is it, are we going to plant maize? Are we going to plant corn? Or are we going to, do some sunflowers or do something else? That will just make if the prices go down and they keep going down. I mean, if the corn prices keep dropping, the U.S. farmers are not going to plant corn. That's, it's just ridiculous. So that's the way it works.
Subsidize them to plant the corn, but that's another story.
Yeah. I hope so.
I'll finish on your commodity inflation point. I think that all came out of the 70s, huge inflation with the oil spike and the Bloomberg commodity index. Everything was like 50, 60% oil, all those commodity indices. So everyone's like, look, the commodities do great during inflation. This is how we cover it. But to your point, unless you just want to have huge oil exposure, which doesn't always work.
No, well,
to say it lightly,
Since I've been in the market to now, I think about 12 years ago, I was on an interview and the guys asked me, where you think the crude oil price is going to be. And at that stage, it was $100. And I said, well, it's just going to keep rising because it's a non-renewable product. And it's been painful to watch. It go down. So, but in the grains, in our grain program, obviously that's where I'm saying that, the inflation effect is probably not as great just to buy and hold them. You've got to manage that position. Since we're moving between oversupply and demand, you've got these fluctuations. And that's why I like the market, because it can't rocket up and keep going up, and it can't come down and keep falling down. It's got to stay within those sort of soft limits. And as most commodities would, but I think the grain markets, you can calculate where they are. Or at least we can do that for the markets that we trade.
And tell me again the market. So in that ag program is which grains?
Well, in the ag program, we've just got U.S. commodities, and in the diversified. No, I'm lying. In the diversified, we do some sugars on European sugars futures, and we are looking what else we can add there. But it's a little bit more diversified. But the grains program is just Chicago grains. It will be the 3 wheat classes: the soybeans, the soybean meal, the soybean oil, and corn.
And talk a bit about soybeans. I always call it like the most popular market that nobody outside of commodities knows about, right? Like I think if you went up to the average person on the street and was like, what is this? They'd be like edamame, maybe. They had it at sushi restaurants. I read they
Okay.
don't know soybeans, but in our world, it's like, right, a main product. So
Yeah.
I don't know if there's a
It's,
question there, but
it's
tell
a,
me, in your
well,
world, right,
it's very,
soybeans is a main product, right?
yeah, it's a big product, and it's a product that really can do very well because it's highly liquid, and it's a product that's high in demand globally. So this will always make it relevant. So we like it. We like the liquidity that it has, and the fact that it's got a fixed sort of storage. The international picture of the soybeans is getting a little bit complicated. Well, I won't say complicated. It's getting a little bit more busy with Brazil coming onto the market. Well, they're strong on the market. Argentina is there. So this is creating some competition, I think, for US, which has always had a large amount of soybeans to export. But
Especially here in Illinois.
it's a volatile product. And I think if I'm saying volatile, I don't mean it's totally crazy, but it moves. The corn market is like very sluggish, and the wheat market is like sluggish as well. So the soybean adds a nice sort of mix to it, and it gives opportunities on the spreads that you can trade.
And was it last year or 2 years? Like the meal was nobody wanted the meal, but there was a ton of demand for the oil. Was there some, what was happening there? Did I get that right?
I'm not sure exactly which they were looking for, but what we call the crack spread that's actually where you're looking to buy the beans and then you're selling the meal and the oil. That's at pretty historic levels. It is a big incentive for process to crush soybeans and sell the meal and sell the soy oil. So, but that won't last forever because as it's an incentive, at a time the guys will be processing more and they'll start paying more for beans and it'll pick the beans price up. So there's a sort of interesting three-dimensional dynamic there, which creates a lot of opportunities because you can do backwardation on soybeans versus the backwardation on soy and meal, for instance. And this is just giving us a little bit more toys to play with and instruments that you can actually go and analyze. The US got lots of statistics. I mean, there's so many statistics available that you can really do some good homework and get some good statistics out of it, and you can actually present a case for that.
And did you ever mess around? You don't do any cross, like meal versus oil spreads?
No, we do.
Yes,
we do.
Okay.
No, yes, we will. Sometimes we will, if there's a good an opportunity, we'll have a look at that. But we sort of look at the trades, obviously, continuously, but we've sort of got a trade generation where we've got lots of inputs of trades that are coming that we'll break down and have a look, and then we'll see how much money we've got to invest and how can we disperse that between this risk and that. And it's always nice to have something else like a soybean versus corn ratio that might be able to add some value.
So you're looking at Brazil, China, America. Like, how do you do all that from your seat in South Africa? Is that hard? You think, right? One, you just have this huge time difference. But two, do you think could you have done this 10 years ago? Or do you think the internet and all the information today is...
Yeah, absolutely not. No, we couldn't have done it.
Okay.
If the Chicago Board of Trade didn't go electronic, we would have never been able to do it. I would have to move to the US, vote there, and sort of, set up the business there.
Could you handle the Chicago winter, you think?
The Chicago
winter?
No, definitely not. No. It's
it was like negative 20 Celsius here 2 weeks ago. Yeah.
I can't believe people can actually live there. Really, I can't believe it. But it helps me to be here. And if I'm looking at the sort of the bigger picture, because this is normally what happens when you're day trading, you're so focused on the small picture of prices moving up and down that you get in and out, and eventually you either lose or you break even. There's not many guys that will make money on speculating their day trades. But when you look a little bit further from the screen, if you're looking from South Africa and you're looking toward the US and you're looking at the whole of it, and you're looking at the weather patterns, I'm not looking for something specific. I'm looking for the global effects that are taking place. And the same with the supply and demand. So it's easier for me to sit far away from a market and to be able to look at it. It gives me sort of a big picture. I like to think I can see the horizon better than what I was if I was a farmer in anywhere in the US planting and it's minus 20 degrees. How can you have a positive feeling about your crop if it's minus 20? I don't know how that's possible,
Yeah. And it seemed like you get rid of all the biases too, right? Like you don't have the U.S. farmer bias or the Argentinian.
There's a lot of noise. There's a lot of noise, obviously, coming out of the agricultural markets from various sides. So, and obviously one of them being the weather. So like we've just mentioned it's minus 20 or it doesn't rain. It's kind of difficult to take up a market position against your current weather. But yeah, being young, I can filter out. Well, I suppose I could filter out if I was the US as well. But just to take away the noise, find out what's important to you, get that data, get it updated, and make your decisions from that. Because there's obviously too much noise and too much biasness that you can actually pick up yourself.
Where do you see the most noise these days? Like, what do you find yourself discounting more than?
Well, absolutely the politics. The politics is obviously horrendous. So you try to not listen to the politics, but it's affecting our markets, and it didn't do that before. So this is really been challenging, actually, the last while.
Have you heard? We call it the taco trade. Trump always chickens out. TACO.
Okay.
Taco trade.
Well, it sounds like that's going to realize today.
But people have been trading that, right? It makes a big move on an announcement and they take the other side of it. And after a few weeks, it gets unraveled and it's been a good trade.
I can't understand why people don't understand Trump, because I think I understand him. He makes a big noise, like you say, makes a big noise. Everybody sits up straight and gets scared, and he comes in and makes a deal. Well, it sounds like a good strategy from that point of view. So that's good.
And what about the Chinese politics? Like, you think they are playing chess when we're all playing checkers? Like, are they just manipulating this and they come out, like you said earlier, they'll just, if price gets too high, they'll switch or they'll change their buying patterns? Do you think they're in the market also, like manipulating that or no?
Yeah, Jeff, that's a difficult question. I just know there's not much to know, not much info to get from them. The info coming from China is limited, and it's not credible. So that's probably one of the noises I try to ignore, because if you're going to try and figure out what's happening there, they seem to stick to fundamental moves or fundamental things that change, but I don't want to risk something on that. It's just, that's just too unpredictable for me.
Do you look at their futures markets, at their prices there?
Yes, I did look at their futures market, but it's, except the fact that the NFA, I think, has got a crackdown on there. We can't trade it. You might look at it. We can't trade it, I suppose. But just on that, let me just, I'm not alone in the business, and I'm not looking at, this noise and stuff alone, or China. I have three guys with me, Juan Dreyer and Louis van Wyk, and the three of us are sort of we are the pinnacle of the company. Yeah. It's committee managed. That's what I'm trying to say. It's not on a whim of what I'm saying. There's three of us involved in this process, besides the people that are helping us with the administration and the analytics. Good
point. You have global offices, right? You're in a few different cities.
Yeah, I wouldn't say global. It's just nationals. Yeah, just nationals.
Okay, I thought you had London.
No, we were a member of the ICE exchange in London. For old energy exchange. So that was previous, but we're not there. We're not a member of the exchange anymore. But yes, our offices are now just local.
Okay. In Johannesburg?
Well, it's not Johannesburg. One is in the Free State and one is in Limpopo. And there's actually two in the Free State, so to say, and one in Limpopo. Yeah. But once again, if we couldn't do this 10 years maybe, but 20 years ago we probably couldn't, because now we can all just get on a call like me and you are doing now, and we can discuss this. And we can actually have our compliance department turnkey trading partners. They do all our compliance, they do all our performance measurements, and they've been doing a very good job of that. So we get them on board and we can discuss whatever issue we have quite easily. It's becoming a lot easier to do this business as far as logistics.
Right. You didn't, in the past, were there people who said they needed to come have it on site and then they didn't want to do the travel and all that? Of investors saying like, I can't get them.
That's probably the hardest part for us as a South African business is the so-called political or the logistical point. South Africa is one of the BRICS countries, which is obviously not politically correct for the US at the moment. The local government or the ANC government, corruption and crime is the order of the day. So them flirting with Russia and flirting with Iran doesn't help our business, even though the same way you might not be agreeing with everything Trump says, the same way I'm definitely not agreeing with anything the ANC says. So to try and convince somebody in the US, to invest with us as a South African company, it does have that challenge, So we try to be as honest as possible about this. And we've all got governments that we don't always like.
What's the prognosis there? Is that for the foreseeable future, they'll be in power or there'll be a switch?
Well, they're still in power, but they're barely holding on. But I don't know what's going to come after that.
Right.
So that's the question.
Could be worse.
Yeah, it could be worse. But currently, this is my home. If I wanted to go somewhere, I'd really like to go to Texas if I was going to immigrate. But just because I don't think it's as cold as Chicago. But currently, this is my home. This is where my feet are. This is where I'm planted. I'm not going away just because, some crime and corruption is taking place in the country, But that is definitely the challenge for most South Africans. Can you live with the crime and corruption? And where I'm situated, I have obviously I have a Starlink internet connection. I'm totally off the grid. We have our own power supply. We're all solar, all water is own supply. So we're not dependent on any municipal or government sort of structure. But I'm happy to do it here. And the trading hours it's in the evening, so I'm quite working from home. It's not.
Yeah, what's your day look like? What are your hours?
In the morning, I'm farming and maybe using the bow, maybe not. So I'll do the farming sort of structures. We have a farming
what do you
enterprise
farm on your land.
Yeah, on the family. Yeah, it's on our land. So we're farming mostly there with rare game species. We do have a number of game species that we've built over the couple of years to try and build, herds that are disease-free and what you would call highly valued animals.
Yeah.
So that's what we try to do. Try to breed game that other people would buy that they've got a high value.
That they'll buy and put on a game preserve or a hunting ranch or something?
Yeah, definitely for different reasons. Some will be for ranching, for hunting, and others will be for like safaris. Well, I suppose it's not no secret, but I can tell you we breed rhinos, and rhinos are a sensitive subject, obviously.
Yeah.
But the guys that will buy them, it's like you don't want to let anybody know you've actually got rhinos because it's it's something that can attract poachers and sort of that cybercrime. Yeah, so we breed them and we'll sell them to wherever who's looking to increase their herds. It will be in nature reserves. Nobody's hunting rhinos and nobody's slaughtering rhinos for rhino horn. So at least the guys that are buying, because why buy something if you can poach it? These sort of things. But we sell them. We sell.
How do you breed them? No, I got too many questions.
Okay, no, it's
let
quite
them go.
easy.
They're out.
Yeah, it's quite easy. You just let them go and you just feed them. You feed them so that they're happy. And so, they're not intensive. They're not, if you're asking that, they're not in small camps, one bull and two cows or sort of thing. They roam the whole farm. And we've got a couple of cows and we've got a couple of bulls walking. So we just, we just let them be and we just look after them. I think that's probably the biggest thing we need to do.
And you got any hippos around there?
No,
those are more dangerous, right? Way more than the hippo.
We would have loved to have them, but it's a bit of a dry bass. We don't have a river. Yeah, we don't have we have them. We've got to now and again we get elephants coming through that have broken out from some reserve, because most of the elephants in this region are in reserves. They'll come in, they'll break a couple of things, and then they'll go off again. But and that's about probably the biggest. We've got resident leopards and stuff like that, and other sort of predatory animals, sort of thing. And then we've got the normal plains game that you would basically be using for meat processing or for interest in that. That might be even interested for hunting purposes.
What's the thing you're most scared of? What's the animal you're most scared of there?
It's a little one. They call it a scorpion. That's the one I don't like. It's just that size. But I'm not afraid of a black mamba, which is probably the one, this black mamba snake. People don't like.
Yeah, I'm afraid of that.
They can get very, very ugly, but those little ones, they'll send you to ICU. And you won't be enjoying it. And you can find them anywhere, from under your carpet to under, in your shoes or anything. So
check your shoes before you put them on.
You best be looking out for them.
All right, let's finish it up. What do you see for the grain markets moving forward here?
Yeah, as far as the macro positions or the view is, I'll still stick with grains. As far as on my programs, I like grains because of the physical things I've mentioned earlier, and we've had a lot of volatility in the grain market really in 2025. But I think 2026 is going to be the recipient of that, and you've got to, the equities, the U.S. equities have always been strong. They've been strong for a long time. It's like you don't get into the market when it's on top. When it's on top, you actually should be thinking about getting out. And it's the same when you join a program. You don't join a program that's been doing very well for the last year. You sort of wait until that good program is relaxing a bit, and then you get into sort of those type. Same as you're buying a product. But I think there's going to be still a lot of interest as soybeans and the corns. So these are products that people need as the world is getting bigger, obviously, and more people. Food supply will still always be there, so it's going to always be a commodity that's worthwhile trading.
And do you look at climate change and different environments like it's going to stress the crops, or you think technology will keep up with that and will be okay?
Jeff, that's very confusing, because some guys will tell you the climate change is hitting them negatively. Other guys, once again, we might say it's hitting them positively. But if there's going to be a climate change, and obviously I'm not saying there isn't going to be one, it will impact the food security tremendously. Yeah, I'm quite sure of that.
Yeah, or at least more volatility.
Yeah, and then you'll always want to be longer carry spread. You'll always want to be there. And the markets, we're saying the markets has been quiet in 2025, the agricultural markets, but it's giving you opportunity to buy carry, for a good period. And this is where you'll get rewarded if you actually, have patience and not waiting for some, something just to run, or trying to get up on a breakout. You just have to have patience. And that's why I say it's seasonal. These things will change seasonally.
Well, should ask this before, but with all the different, right, with Brazil and Argentina are growing and harvesting while we're in the winter, and does that eventually become seasonality goes away because there's always someone harvesting?
Yeah, I suppose Brazil is throwing that into the equation now, that obviously getting almost 3 crops of corn a year. So this will probably make that the carries will probably not always giving you a full carry, but it'll always be a safe trade if you can get it. That won't go away. But it will mean that we'll have markets in a lot more backwardation than what we currently do. And as I said earlier, you can play and look at the backwardation of one product against the backwardation of another product, and therefore try and limit your backwardation effect. There will still be opportunities in that. So it's not these strategies or certain strategies been working for 20 years is going to carry on working. You have to work these markets.
It seems like it'd be more dependent on right? You have to be a Brazil weather expert and a U.S. weather expert and an Australia, right? You have to know
I,
what's happening in each of those spots.
yeah.
No? Yeah.
Well, if you're getting 3 crops off a year, I'm not sure how Brazil's weather is going to be that challenging, especially when they're producing that amount. I think that changes the effect, and it is true. I mean, look at the weather in the US at the moment. It looks bad from where I'm sitting. It looks bad, but we're not seeing
Yeah.
anything on the price effect of that. So
Mm.
maybe that's a little bit of noise you need to try and filter out and have a look. So yeah, I think it's a changing market, Jeff, and obviously we need to look at what Australia's putting out. We need to look at what Brazil specifically is doing and how they can move that. And but I think to get away from the risks involved in that is to do the spreads, not do the futures, because this is where you're sitting on the edge of your seat, or looking at you've got your one eye on the TV to hear what is happening, with the weather in Brazil. The way to get away from these things is to do spreads.
Like, I don't care. Right. And it seems to me it's probably less edge than it used to be. Like if you had the weather team and you had, right now that data seems to be all out in the open. Like anyone and everyone can get weather data in
Yeah.
Brazil
Well,
or in the US.
I'll tell you what, I've had analytics teams, I've had weather teams, satellite teams in the past, even when I was working for those grain merchants, and we were paying a lot for satellites things, and we were never able to make money of that.
Like the satellites trying to see what the yield's going to be and measure the shadow length and all that.
Yeah. Looking at the satellites, looking at, the crop quality, and the condition of the crop specifically. And we may have been right, but we never got our timing correct on that. You see, maybe there's a large area that's stressed and it's going to increase. So you start buying the product and then the prices go down and then eventually you get kicked out the market. And then suddenly everybody realizes it's dry and then it goes up. So, that's a terrible game. I don't want to be there. So I like the spreads. I can sleep pretty calmly.
I have no proof of this, but I spoke with an energy trader once who they were analyzing BP's like oil tanks to see how much storage there was and whatnot. And then BP like painted them with some paint that would not let the satellite penetrate the tank. So it was like a arms race to be like, okay, how can we? So yeah, that works until it doesn't.
It's a lot of trouble to get all that data, and obviously from the agricultural, it's probably because you've got a very wider sort of place that it can come from. So I think you're going to make the choice. Is that worth the effort to get that data, and can you use it timely? I found other things that work for me it works for us better.
Oh. And mainly just spread it out. Don't worry about it. All right, Bruce, I think we'll leave it there. Thanks so much. I'm going to make it to South Africa one of these days. We work with a lady I told you off screen in a Hoedspruit. Am I saying that correctly?
Hoedspruit. Yes, Hoedspruit.
Hoedspruit. So yeah, now I can visit 2 of you out there. So
okay, good. No, you're welcome. Let me know when you're coming. I'll organize a pickup for you at the airport. But yeah, so no, more than welcome. Anytime.
Love it. All right, Bruce, thanks so much.
Thanks, Jess. Thanks for the interest. I really appreciate it.
Okay, that's it for the show. Thanks to Bruce. Thanks to Jeff Malec for producing. Thanks to RCM for sponsoring. We'll see you next week. We've got a good one with Patrick Kaze of One River coming on to talk risk responders, trend following, total portfolio solutions, portable alpha, and all the rest. See you then. Peace.
You've been listening to The Derivative. Links from this episode will be in the episode description of this channel. Follow us on Twitter at RCMAlts and visit our website to read our blog or subscribe to our newsletter at rcmalts.com. If you liked our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear from you. This podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.